Welcome back to another edition of the Prepper Recon Podcast. Our mission is to bring you great interviews with preppers from around the world so you can be better informed and better prepared for everything from a hurricane to the end of the world as we know it. This episode is brought to you by CampingSurvival.com. Whether your plan is to bug out or bug in, CampingSurvival.com has all of your preparedness needs, including bug-out bags, long-term storage food, water filters, gas masks, and first aid kits. Check them out online today at CampingSurvival.com. Be sure to enter coupon code PrepperRecon for a 5% discount on your entire order. Today's guest is Andy Hoffman of Miles Franklin. Andy, thanks for making time to come on the show.
Always a pleasure. This is the first time, and I look forward to many in the future.
Absolutely, absolutely. Thanks for coming on. And since this is your first time on the show, can you tell our listeners a little bit about yourself? And did you ever work in the precious metals mining industry?
I did. Right now I'm the marketing media director for Miles Franklin, which is one of the largest bullion dealers in the nation. But before that, I had a 20-plus year career on Wall Street. I'm a CFA. I was a sell-side and a buy-side analyst at major firms. After that, I spent 5 or 6 years as either an investor relations officer or consultant to dozens of junior mining companies. But I've kind of sworn off the entire Wall Street part of the business, both on a personal basis and my personal investments and work. So now I'm completely in the world of physical gold and silver.
Very good, and congratulations on getting out of the Wall Street side then.
Yeah, well, it was a conscious decision. I mean, I had to disavow 20 plus years of what I learned and what people paid me to do. But when I realized the markets were completely rigged, I eventually decided I had to leave, and I've become kind of a Wall Street whistleblower of sorts, discussing, what I've seen and what I see.
And the Fed recently decided that they are actually going to start tapering, and I think that surprised a lot of people. Were you surprised by that? Are things getting better for the overall economy?
Well, things are not getting better for the overall economy. Objectively, it's pretty obviously they're not. The only things that are, quote, better are the fake GDP numbers, which are based on inventory builds and understated inflation. And of course, the even bigger fake unemployment, report that's put out by the BLS, they focus so much on the actual unemployment rate, but the unemployment rate has been plunging because the labor participation rate is at a 35-year low, not because new jobs are being created. And the ones that are being created, those that are not created by the birth-death model, which arbitrarily creates about 100,000 jobs a month that don't exist, are waiters and bartenders, a lot of minimum wage part-time jobs. They now count part-time jobs as full-time jobs. So look, it's just a little propaganda game. As for tapering, I've said all along they would never do it. And for a long time I was right. But what they're doing now is not really changing anything. For one, they've extended the timeline of the zero interest rate to pretty much infinity, because they said, forget the 6.5% in unemployment rate threshold. We're going to be there long after that. In fact, our guesstimate, and their guesstimates are always wrong, they're always overstated, is that at the end of 2016, that is 3 years from now, the Fed funds rate will be a whopping 1.7%. The average over the last 60 years is 5.2%. The last time we were at 1.7% was in 1961. So that's any indication of how good things are. That's pretty sad. As for the actual, quote, taper, we're talking about they were doing $85 billion a month or $1 trillion a year. Now they're going to do $75 billion a month or $900 billion, which is completely imperceptible. They already own a third of all the treasuries and a half of all the mortgage bonds in the whole country. And by the end of the year, they'll own a half of all the treasuries and probably 3/4 of the mortgage bonds. But more importantly, if you do the simple math, I put a piece out just Friday called The Mirage of the Taper. If you just look at the numbers they put out, they've they've QE'd far more than $85 billion a month. My estimate is that they've done about $130 billion a month, to keep up with all the capital losses they've had with interest rates going higher. So the Fed hasn't really done anything. It's all cosmetic. And the only reason, they gold and silver are down is because they've been under attack all year. But we can talk about the physical market in a second, which is, completely decoupling from the paper market.
And you mentioned that although they claim they're going to taper and start printing 10 billion less a month, that they're still going to continue to target the zero rate interest policy. So I don't think I quite understand how they can print less money and still think that they're going to target that low rate. Are they going to convert that big NSA data center out in Utah? Are they going to use that to start mining bitcoins? Is that how they're going to supplement the 10 billion a month?
Well, that's my whole point. I mean, first of all, you can't believe any numbers the Fed says or anything the government says in general. And yeah, you can say the Fed is owned by the banks, but it's one and the same. It's basically a government agency as far as I'm concerned. The fact that the zero interest rate policy, the way that they keep rates at zero is by buying short-term bonds. So whatever, if you say that they taper 85 billion a month or 75 billion, yeah, plus what they're doing with their open market operations every day to keep the short rate, down to nothing. And of course, as you mentioned, and I just mentioned before, they not only, they said, yes, we will theoretically taper, but we're going to in other ways, like keep the zero interest rates forever, basically. And if the economy were truly improving, they wouldn't be doing that. Of course, the economic data for, the housing industry itself, which the BEA, Bureau of Economic Analysis, earlier this year said accounted for half of the entire GDP growth of the first half of the year. Well, we now know that housing has been rolling over in a major way since interest rates started creeping up because of their taper talk. And now that, this kind of taper talk can really make things get out of control. If we get over 3%, we can be at 4% in a hurry, and the economy will crack even further. And again, this is the entire world that's dependent, that's addicted to the U.S., the world's reserve currency having ultra low rates. Just look at the Chinese repo rates surging, and the last time they surged was when you had the taper talk in June. The world needs ultra low interest rates because of all the debt they built up. And trust me, the Fed is not going to stop printing no matter what they say. And frankly, they're not going to say anything more than they've said already. And remember, we have Bernanke going out after 6 or after 8 years, and he desperately wants to say, yeah, I did something, because he's taken interest rates to zero and left them there and created this mess. And Janet Yellen is far more dovish and has been than he has. So you think she's going to come into office and increase tapering? Not a chance. I believe that tapering is going to increase sometime next year when people realize just how bad things are. And if the interest rates really get out of hand, then they may do it very quickly.
Yeah, she is talking that she wants to be more dovish. If we had the moniker of Helicopter Ben for him, what are we going to call Janet Yellen? Spaceship Janet?
Yeah, I mean, look, Janet Yellen is even more of the government shill than Bernanke, because Bernanke at least started in, he spent more time in the academic world, and while she spent the great majority of her career in the Federal Reserve banking system. So she is the ultimate party line tower to Wall Street and to Washington, and she was put there so she can print money.
And you mentioned that it doesn't look like the 10-year Treasury market got the message that we're supposed to keep the zero interest rate policy. You said it's pushing close to 3%, and that's up from about 1.6 back in March, so almost 100% jump in 6 months or 7 months.
Well, the zero interest rate policy refers, of course, to short rates, to specifically the federal funds rate, which the banks borrow, lend each other to overnight. The only people that benefit from that, of course, are the primary dealers like the Goldman Sachs's and the JP Morgans. No one else gets those rates. In fact, we get higher rates than ever because, our credit rating as a whole is so bad. But the 10-year rate, again, like I said, because the 10-year rate has gone from 1.6 in May when they started talking, when all this taper talk came around, to almost 3% now, the Fed alone, I calculated in my piece, has had $330 billion of losses alone, and they are a very heavily leveraged entity themselves. And of course, the entire economy is based. Look at the utter collapse in mortgage originations. They're down like 70% in 6 months. And now that if they want to mess around and talk about tapering, they're going to push interest rates higher. And of course, look, we talk about the manipulation of the gold market. The manipulation of the treasury market is as bad. And you could see right now the desperation of them trying to keep the 10-year rate under 3%, because the 10-year rate is the most important benchmark in the entire world, because there are more interest rates like mortgages and loans that are pegged to it than any other rate in the world. Aside from LIBOR, which is also rigged, as we know.
Yeah, we just had the big scandal on that, and people still think that it's conspiracy theory to think that markets are rigged. That's funny.
Well, no, only gold. That's all. Gold, and of course the stock market. It can't possibly be rigged, even though the far larger bond markets and foreign exchange markets are overtly rigged. And of course, when it comes to the conspiracy theory, I mean, the stock market is rigged by what's called the President's Working Group on Capital Markets. It's a real government agency whose mandate is to protect the market. Just like the Exchange Stabilization Fund, which has been around for about 80 years, is a government-funded agency whose job is to manage, as they call it, the foreign exchange and gold markets. That's their mandate. It's their real things. And of course, QE, the Fed's job is to manipulate interest rates. But there is no manipulation in gold, if you ask anybody.
And you just mentioned the Dow, and the Dow shot through the roof on the taper news. Isn't that a little bit like a heroin addict getting excited about going through withdrawal?
The Dow didn't do anything. The Dow is the most rigged of all markets, because unlike the gold market, which has a paper side and a physical side, I mean, the physical side is out of control. The demand is at all-time highs compared to the paper price, which they keep slamming. But as for the Dow, they can just take it to whatever level they want, because there's no real assets behind it. They just keep printing money and buying shares with it. And ultimately, I think, frankly, the odds of it hyperinflating are greater than the odds of it crashing. I mean, yes, it could do like in 2008, but I don't think they would let it. I think the more likely outcome is what we've seen in Weimar Germany and Zimbabwe, what we're seeing in Venezuela now, where the stock market's up 500% this year, despite the economy completely collapsing, a 50% CPI rate, social unrest, toilet paper shortages, food shortages. So people are ultimately going to have massive real losses in the stock market. But right now, it's completely supported every second of every day. And, believe me, no one was buying stocks in the real world because the Fed made a nothing announcement that they're not changing anything.
What's the worst case scenario look like in Andy Hoffman's mind? Could we have a total currency collapse? Is there rioting in the streets? Are people fighting for food? Or is it not quite that bad?
Well, this is what I've been writing about for years. There's not really too many shades of gray when you talk about the end of a fiat currency, or in this case, all the fiat currencies. Look, we've had 599 throughout history, and every single one has failed. Except for the handful of countries that were actually conquered by another country. And if that country had a fiat currency, then it ultimately failed too. I mean, it's a Ponzi scheme in general. That's what a fiat currency system is. It must keep growing larger and larger. That's why you see the debt, starting to go up exponentially, exponentially, and then eventually, parabolically, until they collapse. It will happen. When you say what is the worst case scenario socially, well, it could be pretty bad. I'm not sugarcoating it. I prepare as if such a scenario could happen. I expect draconian government response. I expect social unrest. I'm hoping it won't be as bad as I anticipate. But it's every country has to deal with the same thing. We're all tied to the same doomed fiat currency system. The problem is the United States, because it's had the reserve currency for so long, has had the highest standard of living relative to the mean. or the median. So it has the average standard of living will fall in America more than anywhere else. And that's what I fear the most.
And then also in Bernanke's speech last week, he claimed that inflation was around 1.6% and that he would like to see it get up to about 2%. So that would be about a 20% increase in the rate. Do you think the inflation rate needs to be 20% higher than it is now? I mean, are the stacks of money in your house starting to create a fire hazard, and you just need prices to go up so you can get rid of those? So if there's a fire in your home, you'll be able to find the front door?
Well, look, I mean, I've been talking about the government economic data for years and years and years, and it gets worse and worse. Heck, we just had an actual whistleblower come in and say that the October 2012 unemployment report, which was miraculously so good right before the election, he came out and said, yeah, they told me to just make up the numbers.
Oh yeah,
I mean,
the guy from
as if
Census.
we didn't know that, as if we didn't know that already. I mean, that's what they do. The unemployment data is the only thing that's as bad is the inflation data. I mean, look, to say that inflation is 1.6% is absolutely insulting to anyone in the world. I mean, this week alone it was reported that both beef and chicken prices hit all-time highs. So to say that, and then of course you have Obamacare where, these are just a couple examples where people are seeing doubles in their rates. Across the board you're seeing fees, taxes, and pretty much anything that you need in life. I'm not talking about things you want. I wrote a piece called Want versus Need. If you want a TV, it doesn't go up in price, but you need food, and that has been going up in price. And, so if you go to John Williams' Shadow Stats, he's the preeminent, breaker downer of government inflation data. And he's said that for years the average is about 7 to 10%. So Bernanke, they just make up numbers and say, yeah, inflation's 1%, it's 1.5%. Ultimately, they'll just keep rejiggering the numbers to make it, look less than it is. But the fact is, the more that they print, the harder it's going to be to pretend that things are that low.
And then all that money that they've printed, do you think that that's going to start looking for a home in hard assets?
Well, it has to eventually, because again, it's a Ponzi scheme that has to keep growing larger. They must keep printing money. And then some people say, oh yeah, but the velocity is low, so you're going to have deflation. Deflation is a misnomer. Of course, inflation means the amount of money, the rate of change in the money supply, which will keep going up. And right now, that money, the banks are not lending it out. They're just being given that money to speculate in the stock market with. And of course, the government's printing its own money and supporting the stock market. So it's a nice little game. But the fact is, when they print that much money, what it does is it causes people, the other nations around the world, to have to print money to keep up with them. It's called competitive currency devaluation, which is why you're seeing massive, massive inflation around the world right now. Americans are so secular and they sit there and go, well, inflation's only up, 5 or 6% here. What's the big deal? But I mean, look at what's going on in the Fragile Five, for instance. The Fragile Five currencies, the Brazilian real, the Turkish lira, South African rand, Indonesian rupee, and Indian rupee. I mean, a quarter of the world's population live there. And because of the exported inflation, as the Fed prints money and causes these countries to fight back by printing their own money, these currencies are down 20% on average in the last 2 years, which by not coincidence is when the Fed started first with Operation Twist and then QE3 and QE4. And then look at what Japan is doing because they're so desperate to gain manufacturing market share. They're printing on a pound for pound basis more than we are. So basically this inflation is spreading around the world. And because as the Ponzi scheme grows bigger, everyone else will keep printing more and more and more until eventually the cancer will go up the totem pole to the top, which is the dollar, and kill it too.
And then also the art market and the diamond market, we've seen huge price increases there. And we've even seen people flooded into Bitcoin. It was almost $1,200 before it hit its last spike, and I think it's fallen back to somewhere in the sixes now. But and then we know that we had record demand for silver eagles this year. I think they sold 40 million ounces of silver eagles this year, and that was back in November. So they still had another 6 weeks of sales to do after they hit that record amount. Why aren't we seeing that sort of a price increase in silver?
Well, when it comes to, I mean, the art and diamonds and those things, that's a perfect example of that inflation. That's what would be happening with gold and silver if they weren't being suppressed. I mean, and, Bitcoin, yes, I've written a lot about Bitcoin, and part of what I said is that it's going up simply because, yes, part of it is people are, it's a nice hook about the alternative currency thing and getting out of the system, which ultimately they'll never be able to do because the governments are already fighting back tooth and nail. They'll break into the system. They'll create all kinds of laws. They'll make you criminals and all this stuff. But the fact is, the prices of Bitcoin were surging for the same reason that art was going up. Money is printing and flooding into the investment world. As for silver, yes, I mean, I've spent 12 years not just talking about gold and silver manipulation, but proving it. I mean, proving it undisputably. I'm from the GATA camp, and, they are the experts in this, and I've made myself an expert on it. As for silver, as you said, actually the number is 42.7 million, but they stopped in December because they always stop in the middle of the year. They run out of silver and they get ready for the next year. So this is amazingly, this is a record year for Silver Eagle sales in the United States, and we're talking about more than in 2011 when first silver hit $50 an ounce. And then later in the year, gold hit an all-time high and silver was way up in the 40s. And we ran out of supply in the business. And yet more, with the price plunging this year, more sales this year, which tells you that a lot of that buying has been coming from the East. Because I'm telling you at Miles Franklin that business has been somewhat slower this year. So these are the Chinese that are buying these things left and right. We're also seeing record demand in India. The idiot government trying to suppress buying of gold has only caused a massive black market. And right now the physical premiums, if you could believe, on gold are 24% over the spot price. It's completely coupling. And silver, it's going to be a record year for silver imports into India, outside of the black market. Who knows what the total is? And that's comparing the previous record was 2008 when the entire world ran out of silver for several months. So, we're talking about inventories of GLD, inventories of the COMEX being drained to nothing while you have record demand for physical gold and silver around the world. And, something is going to give soon because in 2014, you can bet anything that physical demand is going to be a lot higher. Heck, the Chinese just 2 weeks ago made what I think is the most astoundingly bullish, statement that you can imagine for precious metals when they said, we no longer intend to accumulate foreign reserves. I mean, they have 3.6 trillion of foreign reserves, and they're having surpluses of like 200 billion a quarter. So that means they're going to plow all that money and probably some of the current reserves into real stuff. And gold there's only 100 billion of gold produced in a year. Some of it by them, and 15 billion of silver. So you can bet that every last ounce that's minted is going to be spoken for by the Chinese. And as Eric Spratt said, they're only one of 180 countries in the world.
Wow. So for folks who already have their beads, bullets, and band-aids locked down, I guess gold and silver would be a good hedge for them to protect their wealth from a currency collapse or hyperinflation.
Well, yeah, I mean, it's not like they're mutually exclusive. I mean, people who are buying, as you say, beans, bullets, and, bread?
Band-aids.
Band-aids. I mean, they are you're preparing for social unrest. Social unrest doesn't just break out spontaneously. The only way you get something that widespread is if the government, has to step in because of something tragic happening. And the only thing that could cause that happening would be a collapse of the currency. I mean, there's nothing else that could cause something that tragic where people had to hoard, Band-Aids and beans. And it will happen. And I hope it's not the worst case scenario, but I do believe that irrespective, if you have all of those things as well as some real money, and that includes, by the way, junk silver. Junk silver is, pre-64, dimes, quarters and half dollars, which are 90% silver. Everyone should have all of these things because look, if it doesn't happen, you still have things of value, and if it does, you may save your life.
Okay, and you mentioned the pre-1964 junk, dimes, quarters, and half dollars and dollars. What else should I buy? Should I buy shares of SLV and GLD? or gold eagles and silver maple
No,
leaves?
no, do not buy SLV and GLD. In fact, do not buy anything that's paper. Anything that's not the real thing, you should avoid completely. SLV and GLD are complete scams to start with. I mean, look who runs them, HSBC and JP Morgan. If you look at their prospectus, you'll see that they are allowed to hypothecate. They're allowed to send it to subcontractors. They're never audited. And, I mean, these are bad people. I personally think they were created to suck demand away from the real thing and into these paper vehicles. And by the way, the gold is being rapidly drained, from its London, vaults and being sent to Switzerland where it's being recast and sent out to Asia. So I believe there's far less gold and silver in those things than they say, and you'll never get them anyway. So, you know, as far as I'm concerned, the only way to protect yourself is with the real thing.
And then do you prefer the eagles or maples, or do you like private mint bars and rounds, or what do you like?
Well, the way that I would put it is, first of all, everyone, as I wrote a piece called Must Own Junk Silver. Everyone should have a little of that. But then, you know, you decide on what proportion of your precious metals you want to be gold and silver. For me personally, I'm half and half. Some people are more silver, some are more gold. Once you decide on that, I think everyone needs to the core of their physical portfolio should be some of the more liquid, well-known names like eagles and maples. Once you have those, you could start to diversify. Now in gold, there's not really many choices. There's not a lot of private mint. So you really, you know, you're probably going to have mostly, eagles, maples, buffaloes, whatever. For silver, once you have a core, holding of your junk silver plus some eagles and maples, then maybe you can start to diversify. But I wouldn't recommend for anyone getting anything more than 1 ounce. I think you're really just being penny wise or pound foolish to own those larger denominations, because there's just too many reasons why they're less liquid and less desirable than the 1 ounce coins.
Yeah, if you ever needed them for a barter situation, it might be more difficult to get change.
Yeah, change is only one thing. I mean, that's why you need junk silver, because they're the lowest denomination. But generally speaking, liquidity, you know, you get these things to make your life liquid. And if you own, let's say, 100-ounce silver bar, first of all, it's very heavy. Some people don't trust them. Some people think they may be counterfeit. You know, you own a 1 ounce coin, no one's going to question it. I mean, we've never seen any counterfeits in our entire 24-year history. And I doubt you're going to see in the 1 ounce realm any of them.
And is there a limit to how low the price can be manipulated down? And is there a limit to how long it can be suppressed?
Well, that's a good question. I mean, how long can you hold something below the cost of production? That's what I've been writing about ad nauseum for the last few months. In fact, I just put a piece out that's called I think it's called How Low Can Something Trade Below the Cost of Production? I mean, for gold and silver, this year the major producers are at their capex is down 62% year over year. They're mothballing mines. They're firing people in their headquarters. And the cost of production in silver is, if you include all the write-offs, it's $25+ an ounce. Even without the write-offs, it's 21 or 22. But of course, with those write-offs, that means that there's no replenishing resources. So if you're talking about silver specifically, I think I think the price needs to be well into the 20s, or else you're going to have an utter collapse in production. I think we're already at the point where we're going to see where that utter collapse is going to happen probably next year. And gold, heck, the CEO of Gold Fields, the 4th largest gold mine in the world, said to sustain the business, the all-in cost has to be well over $1,500 an ounce. So I think the cartel, whatever crazy reasons they have, I know you want to suppress because you're printing money like you've never done before and you're scared that everyone's going to race into it. But they've already pushed it to prices that are so far below what needs to be. That's why we're down to only a couple of 100,000 registered ounces on the COMEX. That's why the GLD is being drained at a record rate and why you're seeing silver bullion sales at record levels. I mean, right now, if these prices stay just at this price, I think you're going to have an utter run on the metal next year.
And then you mentioned that that at some point, I guess right now these guys are staying in business because they're just hoping that they can hang on, and hopefully the price will go back to at least their production cost and hopefully above that.
Well, look, before I worked in the mining industry from 2002 until mid 2008, my entire net worth was in mining shares. And starting in 2008, I started selling them and buying physical. And then in early 2011, I gave up completely on mining shares and went completely physical. So aside from having owned mining shares for all those years, and then I worked for 5 years in the business, it's pretty clear to me that the mining business, aside from being one of the most difficult in the world because of the unique challenges and the governments wanting taxes, they're run by, pardon my French, idiots. If you talk about the majors, they have no comprehension of the fact that they have shareholders. And look, I get it. I was an oil field service analyst on Wall Street for 10 years. I know that it's very difficult to shut mines and or oil wells and put them back on. And for mines, it's just the same. But we're talking about these guys have completely ignored the shareholders over the years, trying to keep things in business that aren't making money. And, right now at this point, they've just shot themselves, to death. They're just struggling to not go bankrupt right now. And I don't know what they're going to do, what it will take for them to change their ways. But right now they are in emergency shutdown mode. They are cutting capex to the bone. They're firing people. And, my guess is if prices are anywhere near here 6 months from now, we will have already seen massive mine shutdowns that they should have done a long time ago.
And then when we get the shutdowns, if we still have this record demand like we had with the Silver Eagles last year, then we'll have some sort of a supply crunch. Is that right?
Yes. We already have a supply crunch because, as I said, when they started this big smash this year in April, there were 3 million registered ounces of gold on the COMEX. We're down to about 400,000. And, when this December contract closes a week from now, we may have 100,000. Think about it. We're talking about $120 million worth of gold, supporting an entire, Ponzi scheme. It's not going to last long. There's going to be a run on the metal. Just look, we had a run on the metal this year in January. They shut them in for 14 days without a crisis because we ran out of silver. We ran out of silver in 2011. We ran out for months in 2008. It's not unprecedented. It's going to happen. And of course, there's going to be a major crisis, at some point in the future because all the world's economies are falling apart and the money printing is going crazy. So when you have the next crisis, 2008, then you're going to see, because of all the damage the cartel's done, you're going to see the supply completely disappear. But unlike 2008, it's not coming back.
And if we have that supply crunch prior to the economic crisis, I would assume that prices will have to overcorrect and go above the production costs in order for them to get those mines back online. Is that correct?
Well, forget even the mines. Even if all the mines in the world went back online, it'll be nothing compared to the amount of demand. Look, the reason the cartel is in there so aggressive is because there's 7 billion people in the world that have fiat currency that are all going to be racing in for the tiny amount of fiat, of real metal out there. And every mine, if it was running at full speed, it wouldn't matter. It would just be a dent in the demand. The math that I've done, look, it's simple math. You do the same math, how much money was printed back in 1980 and how much gold reserves there were. That got you 900 then. Well, that number is closer to $20,000 an ounce for gold now. And every day that number goes up as they keep printing money. So they'll do everything they can to keep interest out. But when they lose control, it'll go up to levels people can't imagine. And again, there's a difference also between, the real gains and the nominal gains, because you're going to see some significant inflation when they lose control. Physical gold and silver will beat everything else, but you're going to see major inflation around the world, as well.
Do you have any specific, expectations for economic turmoil or forecast for the metal prices for the coming year for 2014?
Well, I don't make, quote, metal price forecasts. I'm telling you that today the price should be $15,000 to $20,000 an ounce for gold, and at a gold to silver ratio between 5 to 1 and 15 to 1, which is a target for me. Then you have $1,000 to $4,000 an ounce silver, and these targets go up with every dollar printed. Will it happen in 2014? I don't know. How long can you keep something below the cost of production? How long can a Ponzi scheme grow on top of its tiny little point before it collapses. Will it be this year? Hey, it could be. I mean, there's a great chance. I mean, look at Europe's economy. Can Europe's economy, can the stock markets in Europe keep going up with unemployment? Can Japan keep printing even more than we are printing without something horrible going on? Will a black swan event show up? I don't know. But with each day that passes, the odds that 2014 is a key inflection point in history go up. I just couldn't tell you if it will be 2014 or maybe 2015, but it's not like 5 years from now. I mean, it's coming.
But the prices of metals right now are an absolute gift, so people should run, not walk, to their nearest dealer or online dealer like Miles Franklin, I suppose.
Yeah, well, more importantly, you need to get your ounces. I mean, don't worry about the price. The point is, right now, it's available. If you live in India, it's not. And one by one, a lot of nations, you won't be able to get it. I'll bet you couldn't get it in Venezuela now if you tried. And it's happened here where you couldn't get it at any price in 2008 and 2011, even earlier this year in the silver market. So the point is, not only are the prices historically low, but you actually could get supply right now. And at any time that could change because, as I mentioned, there's billions of people in the world with these fiat currencies on the verge of collapse.
And China as well. I think I saw a picture on Chris Martinson's website of people 4 deep lined around a bullion dealer's showcase trying to buy coins.
Well, yeah, I mean, if you just Google Dragon Boat Holiday Zero Hedge, it'll show you the lines. And see, Dragon Boat's just a minor holiday, and there were 10,000 people online to buy gold. I actually was in China only 4 months ago, in Guangzhou, and there were 10 gold shops in a row, and they were all full of people. I mean, crazy. I mean, there were more people working in those shops than you'll see shopping in a shop in America in a year. It's a big deal. And of course, the retail part of it is only a small part of it. The government is buying like crazy in far larger amounts than even the people.
Wow. But they do encourage their citizenry to purchase gold and silver as well, don't they?
Of course, because China is going to be they already are the major world power as far as I'm concerned, but they are really going to be the major power when the yuan is unleashed, and becomes the world's reserve currency. And of course, they're not stupid. They know that when they have $3.5 trillion of reserves, that are going to eventually be worth a lot less, to put them in real items of value, and not just the government, but they want the people to have it too, because they want to be the wealthiest nation in the world.
And we'll have links to your blog at Miles Franklin in today's show notes, and then you also do a weekly podcast there as well. But for the folks listening on Stitcher, iTunes, and YouTube, can you tell them where they can find you?
Sure. Again, Miles Franklin. We've been around 24 years. We're one of the largest bullion dealers in America. We write a free blog every day. There's 3 of us. I think it's the finest in the entire industry. Again, it's free. You just go on. It's archived, or you put in your email and it'll get sent to you. Or you can email me at ahoffman@milesfranklin.com, or give us a call and ask us any questions you want. 800-822-8080.
Andy, thank you so much for coming on the show today. We really appreciate all the great information that you've given us.
It was great, Mark. Thanks a lot.
Hey, Preppers and Patriots. My new book, American Exit Strategy, Book 1 of the Economic Collapse Chronicles, is now available in audiobook format through Amazon, iTunes, and Audible. Of course, you can still purchase the Kindle edition or paperback edition through Amazon as well. God-fearing patriots and those who believe in the Constitution will find this near-future dystopian novel to be right up their alley. Those who are looking to be more informed about the potential threat to America's financial stability will learn what to watch for and how to prepare themselves for an economic collapse. In Book 1, America is on the cusp of financial annihilation. Matt and Karen Baer face the challenges of Main Street during a full-scale financial meltdown. Government borrowing and monetary creation have reached their limits. When funds are no longer available for government programs, widespread civil unrest erupts across the country. Matt and Karen are forced to move to a more remote location, and their level of preparedness is revealed as being much less adequate than they believed prior to the crisis. American Exit Strategy uses survival fiction to take an in-depth look at the real-life politics and economics behind the issues that are likely to trigger a currency collapse or financial meltdown in the near future. American Exit Strategy is a work of fiction until it becomes history. God bless and happy prepping.